Welcome. Today we're delving into the dynamic realm of investment portfolios. Imagine me as your guide, George Asigo, leading you through the intricate maze of investments. But don't let the complexity daunt you. This journey isn't just about playing it safe, it's about strategically scattering your wealth to boost growth and mitigate risk. And trust me, it's simpler than you might think. Picture this. You're standing at an expansive buffet, an array of dishes laid before you, each representing a unique investment opportunity. From succulent stocks to hardy bonds, sizzling real estate to comforting commodities, the choices seem endless. But don't fret, because I'm here to show you how to navigate this buffet with the finesse of a seasoned gourmet. So, what exactly does a diversified investment portfolio look like? Think of it as your financial safety net, a carefully curated collection of assets designed to weather any storm. But here's the twist. It's not about haphazardly throwing your money into a potpourri of investments and hoping for the best. Far from it. We're all about strategy here. The secret ingredient is diversification. By spreading your investments across various asset classes, industries, and geographical regions, you're effectively shielding your investments. If one sector takes a tumble, others are there to cushion the fall. It's like having an arsenal of financial arrows in your quiver. But remember, the magic of a successful investment portfolio is in finding the elusive balance between risk and reward. You could gamble all your chips on a single high-flying stock. But what happens if it crashes? Diversification mitigates this risk by ensuring no single investment can torpedo your portfolio. I can sense your apprehension. But George, where do I even begin with diversifying my portfolio? Don't worry, I've got a few tricks up my sleeve that I'll share with you. For now, let's keep in mind that investing is like creating a culinary masterpiece at a buffet. It's about choosing a mix of ingredients that work together to create a dish that's both satisfying and safe. As we embark on this journey, I'll demonstrate how to maneuver this buffet like an expert. So, tighten your apron, sharpen your knives, and let's dive into the world of diversified investment portfolios. So, what precisely constitutes a diversified investment portfolio? Well, consider it as your financial safety net. It's a carefully selected collection of assets, each one serving a purpose in your investment strategy. This asset blend is not just a random assortment of investments, but a thoughtfully engineered mix designed to maximize returns and minimize risk. But what does this mean for you as an investor? It means that you're not putting all of your eggs in one basket. Instead, you're spreading your wealth across a variety of investments, each with its own potential for growth and risk. Diversification is the cornerstone of a solid, robust portfolio. It's like having a well-rounded diet where you consume a bit of everything to ensure you're getting all the nutrients you need. Similarly, a diverse portfolio includes a mix of stocks, bonds, real estate, and other asset types. This way, you're not overly reliant on any one investment. But why is this so important? Well, we live in an unpredictable world. Market trends can change in the blink of an eye, and what's hot today may not be tomorrow. By diversifying your portfolio, you're preparing for these uncertainties. If one of your investments performs poorly, others in your portfolio can help offset that loss. Just imagine your portfolio as an archer's quiver. If you only have one arrow and it misses its mark, you're out of the game. But if you have multiple arrows, you have more chances to hit your target. That's the power of diversification. Now, this doesn't mean you should blindly diversify. It's not about having as many investments as possible. Instead, it's about having the right mix of investments that align with your financial goals, risk tolerance, and investment horizon. In essence, a diversified investment portfolio is your financial safety net. It's a strategy that can help you navigate the ups and downs of the investment world. It's your shield against market volatility and your catalyst for financial growth. So remember, diversification is not just a strategy, it's a necessity. It's akin to having multiple arrows in your financial quiver. The essence of a successful investment portfolio lies in striking the delicate balance between risk and reward. Just imagine, you're on a tightrope, balancing your investments on one side and potential returns on the other. It's a delicate act, one that requires a keen sense of judgment and a dash of bravery. Now let's talk about the elephant on that rope, risk. It's an inherent part of investing. You could be tempted to bet all your chips on that one high-flying stock, the one that everyone's talking about, but remember, as quickly as stocks rise, they can plummet. And if that happens, your entire investment could evaporate in a heartbeat. But here's the good news. There's a safety net to this high-wire act, and it's called diversification. It's your financial parachute, ready to save you from a fall. By spreading your investments across a variety of assets, you're ensuring that no single investment can drag your portfolio down. Diversification alleviates this risk by ensuring no single investment can sink your portfolio. But George, how do I even commence diversifying my portfolio? Excellent question. Diversification can seem like a daunting task, but in reality it's a tactical game of chess. And you, my friend, can become a grandmaster. Let's start with the first move, asset allocation. Picture your portfolio as a pie. Now how do you want to slice it? Each piece of this pie represents a different asset class, stocks, bonds, and cash. Just like baking a pie, you need the right ingredients in the right proportions. A solid base of low-risk assets such as bonds and cash form the crust, providing stability. The filling? That's where your stocks come in, riskier, but with the potential for higher returns. The key here is to balance your ingredients according to your risk appetite and financial goals. Now you've baked your pie, but the job isn't over yet. The market constantly changes, just like seasons, and your pie needs attention to maintain its flavor. This is where rebalancing comes into play. Think of rebalancing as fine-tuning your recipe. As market conditions fluctuate, the proportions of your pie can get out of balance. If stocks have been on a winning streak, your pie might become too heavy on the stock side. This is where you step in as the chef, trimming back on the stocks and adding to your bonds or cash to restore balance. Rebalancing isn't about chasing the hot asset class or trying to time the market. It's about sticking to your recipe, the asset mix that you've decided is right for you. It's a disciplined process that helps you stay on track with your financial goals, regardless of what the market throws at you. Now remember, there's no one-size-fits-all approach to diversification. Your portfolio should reflect your unique financial objectives, risk tolerance, and time horizon. So, know your ingredients, keep an eye on the pie, and don't be afraid to tweak the recipe when needed. If one asset class surges ahead, it's time to reallocate and restore equilibrium. Stick to this mantra, and you'll navigate the investment buffet like a pro. Diversification has been the cornerstone of my investment strategy for years. I remember when I first started out, I was enamored with a handful of high-performing tech stocks. I thought, why not put all my eggs in one basket that's promising such high returns? But soon I learned that what goes up can indeed come crashing down. That's when I turned to diversification. It was like opening my eyes to a whole new world of possibilities. I started investing in a mix of stocks, bonds, real estate, and even commodities. Each asset class had its own rhythm, dancing to the tune of different market dynamics. This broad palette of investments not only provided a safety net, but also created opportunities for growth that I had previously overlooked. And when one sector took a hit, I could rely on the others to cushion the fall. The beauty of a diversified portfolio is its resilience. Through the highs and lows, the bull markets and bear markets, it's been my financial rock. I've weathered market fluctuations and emerged triumphant in the end. Before we conclude, let's address the elephant in the room: risk. It's a constant companion on the journey of investing, an undeniable part of the equation. But risk, my friends, isn't always a villain. It's the fuel that drives the engine of growth. It's the spice that adds a dash of excitement to the investment landscape. It's the challenge that makes the triumph sweeter. However, it's crucial to understand that not all risks are created equal. Some are like roaring lions, threatening to devour your hard-earned wealth. Others are more like pesky mosquitoes, annoying but manageable. The trick is to recognize them, evaluate them, and address them strategically. And here's where resilience enters the picture. Resilience isn't about avoiding risks. It's about facing them head-on, learning from them, and growing stronger. It's about staying committed to your strategy, even when the seas get stormy. And above all, it's about patience. Remember, Rome wasn't built in a day, and neither is a robust investment portfolio. The key is to stay resilient, adhere to your strategy, and remember that patience is your greatest ally. There you have it, a diversified investment portfolio succinctly encapsulated. We've journeyed through the buffet of investment options, grasped the essence of a financial safety net, and struck the delicate balance between risk and reward. We've explored the art of diversification and heard firsthand from an investor who's navigated the turbulent seas of investment. Remember, diversifying your investments is akin to having multiple arrows in your financial quiver. It's about strategically dispersing your wealth to amplify growth while mitigating risk. And yes, investing will have its peaks and valleys, twists and turns, but resilience, strategy, and patience are your greatest allies. If you found this expedition insightful, show your appreciation with a thumbs up. Feel free to comment and share our journey with others who might find it useful. Don't forget to subscribe and hit the notification bell to stay updated on our latest insights. Until next time, happy investing.